Hi everyone. Today I want to talk about the news. First up, Senate unanimously passes bill that could ban some Chinese companies from the US stock exchange. Second, China vows to push ahead with Phase 1 trade deal. And last, what are the 5 most compelling dividend aristocrats to own right now? As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying the Kalila, go ahead and like and subscribe. It is currently on sale for $31 million. It is 160 feet long, and it comes with its own 20-foot boat. It has beautiful bedrooms, a full bar and sitting area, interesting and unique bathrooms, a very spacious upper deck, and elegant guest bedrooms. Keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. All right, let's talk about this Senate bill. The Senate passed a bill that bans some Chinese companies from the US stock exchange. The bill was passed unanimously, so it's got bipartisan support. Good to see that there's bipartisan support for anything these days. It's proposed by John Kennedy and Chris Van Hollen, so a Republican and a Democrat, and they are saying that China is cheating and misleading U.S. investors. I'm not sure exactly how much this is about U.S. investors versus getting American regulators into the books of Chinese companies. I mean, unless you're investing in like Luckin Coffee or Alibaba or Huawei, which I don't suggest any of those companies, maybe Alibaba. But if you're investing in a Chinese company, you should understand that there's going to be risks associated with the Chinese government, the Chinese influencing those companies, U.S.-Chinese tensions. And I don't think this is really a huge shock to the economy at this point. It says here this bill could affect over 200 foreign firms. Not all of them are Chinese, but some of them are. And it could affect nearly $2 trillion in market capitalization. So there's definitely a big price tag on this. Their stocks are traded, but U.S. investors don't have the full picture of what's going on beyond these companies. It goes on to say that if this bill is passed, that the 200 companies affected won't be immediately delisted. It depends on how they cooperate with U.S. regulators. There also is a 3-year provision to the bill. That means U.S. regulators must have access for 3 consecutive years, so it's not kind of a one-and-done kind of thing. You have to do it consistently for several years. And then it goes on to say that if these companies choose not to cooperate, they will most likely move to the Hong Kong Stock Exchange. And the last piece, probably the most important piece, is they must disclose if they are owned or controlled by a foreign government. This is the part that the United States really cares about. They want to know how much the Chinese government is owning and influencing the decisions of these companies, and should American investors be investing in companies that the Chinese government is controlling? I think it's fair to say that we probably shouldn't, and the government is basically deciding now is the time to make sure that we are not giving money to these companies or not investing money with these companies, and that's really going to put the market cap of these companies in a tighter spot. I mean, the U.S. Stock Exchange is the largest stock exchange in the world, and if these companies can't participate in that market, that's definitely going to be a major downside for them. So in essence, they're applying some pressure to China. They're going to see how China reacts to this. But this is definitely causing a little bit of instability in the markets right now. In a little bit more China news, China vows to push ahead with the Phase 1 trade deal. The Chinese premier vowed that Beijing will work with the U.S. implemented Phase 1 deal. Partial accord was signed on January following the protracted negotiations, which held markets hostage for much of 2019. Relations between Washington and Beijing continue to sour over blame for the cough situation, financial market access disputes, and a national security law for Hong Kong. So basically, all of this is saying China is sort of trying to push forward with this trade deal, but there's still insecurity, and we're not really sure exactly what we're going to do with China right now. Everyone in the world, not just the United States, kind of blames them for this cough situation. And we've known for a long time that they've been manipulating their currency and manipulating their economy in order to gain an advantage. And the idea of this phase one trade deal was to try to level the playing field a little bit. But can we go forward with the phase one deal when we have all of this other stuff going on right now? I think that remains to be seen. In theory, they're trying to push forward with it, but I think we're kind of holding back on that to see what we decide to do with the whole cough situation. Remember, when it comes to the phase one trade deal, there's not a lot in there. The main thing is that they're going to buy about $200 billion worth of goods from the United States. Most of that's going to be agriculture. There's some baby steps in terms of intellectual property and monetary policy, but there's not a ton in there, so it would make sense to me that China is willing to go forward with this regardless, and it's a little bit of a sign of good faith for them as long as they're willing to do it. It continues on and says that they would like to actively participate in the reform of the World Trade Organization and work with regional partners such as Japan and the Republic of Korea. Then it says the context of these statements were made amidst all of the issues that I said before, the cough situation, financial market stuff, and national security issues. Then the spokesperson for the 13th National People's Congress said that they want a stable and growing relationship between China and the United States, and that it is the best interest for both countries to do so, and also that they want to work together to fight the cough situation. I guess it's really easy to say all of these things, but China has been notoriously shady on these topics. We want to believe them. We want to work with them, but they are the second largest economy. I believe they're the second largest military, and they are an up-and-coming power. And whenever an up-and-coming power is in disputes with the world's largest power, being the United States, historically there's been a war every single time. So it's tough to believe them and want good things, but in the back of your mind, you understand that they are trying to solidify their place in the world, and they are going to do whatever it takes to give themselves that edge. And Americans and the government needs to understand that that is going to be their position. So we kind of have to work within that framework, in my opinion. All right, finally, in some non-China news, the 5 most compelling dividend aristocrats, according to analysts. Dividend aristocrats are companies that have paid out a higher dividend every year for 25 consecutive years, and there are 66 of them. However, this is picking the top 5 they think are the best to buy right now. It says here that the dividend aristocrats are down about 15%, which is about on average with the rest of the market since February. However, it does highlight that 5 consumer staple stocks are the most compelling to buy right now, and they are Coca-Cola, Pepsi, Procter & Gamble, Kimberly-Clark, and Walmart. Coca-Cola has taken the biggest hit here. They're down actually like 25%, I believe. Their dividend is up to 3.5%. Pepsi is outperforming the market right now at about 7%. Procter & Gamble is definitely outperforming the market, and Walmart also is outperforming the market. I'm less familiar with Kimberly-Clark. In fact, I believe that's the only one here that I don't have a few shares of. But I do recommend all of the other companies. I'll have to do some research into Kimberly-Clark. Perhaps I'll do a deep dive in the future. Goes on here to highlight what I was just saying. Customer staples are down 7.8% versus 8.6% for the S&P 500. This is pretty common. Defensive stocks like consumer staples usually outperform the market on downturns, but they underperform on bull runs. And that's really the purpose of diversifying, having some stocks that are going to go down less than the market and having some stocks that are going to at least keep up with the market on upticks. Consumer staples always do this because people just have to buy things that they need, like paper towels and toilet paper and cleaning supplies, all of those things that you need all of the time, whether it's a recession or a depression or whatever. You just have to buy those things to continue to live. Moving on, it says Walmart has actually gained 8% since February 19th, which is the high. So they're definitely outperforming the market. And then it says exactly what I said before here. Coca-Cola is down 25% from its highs, and their yield is actually 3.6% right now. PepsiCo, 7% off of its highs in the same span, currently yielding 3%, which is actually a really strong yield for Pepsi, probably at a discount right now. The company declared earlier this month that a 7% dividend increase. So anytime a company is declaring a dividend increase in a period like this is a good sign. Kimberly-Clark is yielding 3.1%, and has only dropped 4%. Procter & Gamble, who is down 7%, is yielding 2.7%, and last month declared a dividend increase. Again, anytime they're increasing their dividend in a situation like this, that's a good sign, means it's a strong and resilient company. And if Kimberly-Clark is only down 4% during this cough situation, they must be a pretty good stock. Again, I'm not going to speculate because I don't know too much about them, but these other companies are definitely good companies. And I'm honestly surprised that Coca-Cola has dropped this much. Another thing that I need to look into a little bit deeper. It also says that sectors like this tend to be less debt-laden than other sectors, such as utilities, which is another benefit to consumer staples. So then he goes into a little bit of why he chose these companies. He says sales of Diet Coke and Coke Energy have been trending well. Kimberly-Clark is going to benefit from people buying Scott's paper towels and Kleenex. PepsiCo has been moving into health foods and snack foods to offset soft drink losses. And then Procter & Gamble just has such a large footprint and a diverse portfolio between things like Tide and Bounty and Gillette razors. All of those companies are going to continue to sell their products in a situation like this. And for Walmart, he notes that this is the largest grocer in the United States by a pretty wide margin, giving it a greater degree of cash flow stability versus other retailers. Again, I mean, it's Walmart. Everybody understands the business model of Walmart, have massive stores, sell tons of products cheaper than everybody else, and make lots of money. I mean, it's a pretty simple, straightforward business model, and they've done an exceptional job at it. Again, all of this is for entertainment value, and it is not financial advice. Consult your broker and a financial advisor before making any decisions. And with that, let's get to today's jelly. So today's jelly is the gold medalist at the International Juggling Association Championships in 2016. I try to keep the jelly a little light and try to find things that are a little obscure. And this is definitely on that list and still very impressive. So here's what that looks like.
I should ask one more time. Come home, come home, come home today. Come home, come home, come home today. Come home, come home, come home today. Let's be one. I see what problem you on my mind. Many years and still running to the fight. Ain't you the right police? Sexy, what did you do? Yes, we found the time. Let's be one. I'm ready, I'm ready, I'm ready. Ready, I'm ready, I'm ready, I'm ready. Are you ready? I'm ready, ready. I've made a planetary body. I've made a planetary body. Yeah. Sexy.
Of course, if you want to see the full video, I will link it in the description. Go ahead and like and subscribe so you don't miss any of my future videos. Comment what you think about the jelly. and have a great day.